US, let's go across and check on the action on Wall Street today. Straight to New York.
And Bobbi Rebell joins us from the Reuters office in Times Square in New York. Bobbi, good morning. After a string of strong rallies, strong results, American markets have lost a little bit today. Dow Jones Industrial Average looking in the red. What's driving sentiment lower?
Well, unfortunately, it's new concerns about the economy. We've been seeing a lot of optimistic news, so-called green shoots, hopeful signs that the economy was in recovery mode. Now we're seeing some signs that perhaps we may not be home free just yet. We had a disappointing number regarding the services sector, which is responsible for the large majority, 80% of the U.S. economy. So this ISM services index came in lower than expected. That's been very disappointing. We also had new information about the jobs market, a big concern. We've got very high unemployment here. Private sector job losses, an ADP report today came in disappointing. So that's a big concern as well, putting new light on jobs data. We're going to get more data both on Thursday and Friday of this week. So a lot to watch and a lot of new concerns for this market.
Right, Bobbi, on the earnings front, Procter & Gamble out with slightly disappointing numbers. In fact, an 18% drop in Q4 profits. Shares have also been under pressure. What's the latest there?
Another disappointment here. This is a company that many believed would be somewhat recession resistant, if not recession proof, I should say. Many people viewed the fact that Procter & Gamble sells so many things that people need, laundry detergent, baby diapers, that they would always buy these even in a recession. But what's happening is customers are trading down. They're looking for lower price points and they're cutting back, and that is hurting Procter & Gamble's market share. They're under pressure to cut prices. The numbers were disappointing. They're also cautious about the current quarter, and that has people worried. One bright spot, though, for 2010, they are standing by their profit forecast. That's a little bit of a bright spot, but nevertheless, the shares are under pressure, and people are very concerned because this is such a broadly watched company and such a big global company as well.
Right, disappointing numbers coming in there. Bobbi, thanks so much for joining us. In other international news, now details of the Yahoo-Microsoft partnership are also out. Yahoo will get more money from Microsoft during the second half of the 10-year internet search deal. The share of revenue which Microsoft pays to run search ads on Yahoo's network of sites will increase from 88% to 90% according to regulatory filings by Yahoo. 400 Yahoo employees will join Microsoft as part of the deal. Yahoo shares declined about 16% since the deal was announced. Investors, of course, are disappointed on getting an upfront payment from Microsoft. And under the terms of the deal, Microsoft will provide the technology to power the search results and the search advertising capabilities on Yahoo's sites.
Currencies, and there's a view that while China's yuan is undervalued, India's rupee is even more undervalued. Mark Chandler of Brown Brothers and Harriman says look out for a big adjustment in the not-so-distant future.
I think India is very interesting because, you know, the United States Congress often sort of focus on the fact that how undervalued the Chinese currency is. And what many people don't fully appreciate is that by those same measures that show China so terribly undervalued, show that India is even more undervalued. But because India is not engaged in such a extensive manufacturing trade, the U.S. tends not to be as sensitive to it. So the Indian currency is terribly undervalued, but we think that typically many emerging market currencies are undervalued, but there's been a big adjustment in the past 3 months or so. So we think that South Africa is probably overextended, Mexico probably overextended, but the area of emerging markets that seem most vulnerable are Central and Eastern Europe. Large budget deficits, current account deficits, and efforts to try to join the Eurozone, which really require greater austerity.
And joining us now is Robert Bruschka, the chief economist, Fact and Opinion economist. Robert, thanks so much for joining us. Now, disappointing news when it comes to that ADP report on private sector employment. More evidence, in fact, of weakness when it comes to the employment market. What are you going to be looking for in Friday's monthly employment report?
Well, although the talk is about how disappointed we are with the ADP report, the ADP report is still pointing to progress. And the ADP report is not gospel. Remember, when we were losing jobs in the recession on the way down, ADP failed to see the extent of the job losses. Similarly, on the way up, when we are losing fewer jobs, what we're seeing is that the ADP report has rather consistently tended to underestimate the improvement month by month. So I would still be looking for job losses out of the private sector job losses on the order of 350,000 or fewer this Friday.
So that's not good, Bob, but for folks out there who are still sort of confused whether the U.S. economy is recovering at a slow clip or even slower clip, what would you tell them?
Well, that when you lost 740,000 jobs at the peak, you're not going to start gaining jobs before you go through a number of months. You know, the trip back is going to take some time, and we're making that trip right now, I think, at a fairly rapid pace. And we'll see when we get the number on Friday how rapid it is. But I'm encouraged that we're going to continue to make this progress more rapidly. You know, the manufacturing ISM showed even bigger improvement. And these ISM reports don't always tell you what's going on the job market. Let's remember that. And we really don't have any real recession experience from the ADP, except as we slipped into this recession on the way down when it didn't catch the declines in jobs as much as it should have. And even after revision, it still doesn't track those job declines down.
Hey, Bob, appreciate your time. Thank you so much for joining us. Bob Bruskett, Chief Economist of Fact and Opinion Economics in New York.